Have you ever opened the crypto chart and felt so much overwhelmed by those lines and charts? Don't worry, because you are not alone. In this video, I'm going to break down top 5 basics charts every beginner must know before venturing into trade. We are going to look at support, resistance, moving average, candle patterns, and of course RSI. By the end of this video, you understand how traders use these charts to make better decisions and how it's going to help you also to make better and informed decisions as far as trading is concerned. So if you're ready, let's start. First up is support and resistance. Support is like the floor of the price. It's the level where price tends to stop falling and bounce back up. Resistance, however, is quite different. It's basically the ceiling. It's the level where price tends to stop rising and begins to draw back down. Think of it like a ball bouncing between the floor and the ceiling. And traders use this level to predict where the price is going or when it might reverse. But let me give you a pro tip. Support and resistance aren't exact price. They are more like zones where prices are juggling between the floor and the ceiling. The next one is the candle patterns. Now, some candle formation can give traders a clue about the direction of the market. There are different forms of candlesticks, and if you want to know more or read more about it, you can check it out on Binance Academy website for more details about candlesticks. However, they are like doji, where the open and close are almost the same and often signals indecision in the market. And also they are the hammer candle, where small body and lower wick, which often signals potential price upwards. And also there is the shooting star, which can signal a potential price downwards. You can find more, as I said, in the Binance Academy for more details about candlesticks and how you can use it to better your trading skills. It's very important because learning few candlesticks can help you spot when buyers and sellers are taking control. So it's very important that you know few of these candlesticks to help you make trading decisions. The next thing I want us to talk about is the moving average. This is one of the most used indicators because it smooths out price data. We have the simple moving average, or SMA, that takes the average of a price over a set period, like 50 days or 200 days. That is, if the price is above the moving average, it usually signals uptrend, and if the price is below, it usually signals downtrend. Another popular one is the exponential moving average, or EMA, which tends to give more weight to recent prices. Please note that traders often watch the 50 days and 200 days MAs. When the 50 crosses above the 200, it is called the golden cross, or pretty much bullish. That is what makes all of us excited, right? And when the price go below, we call it the dead cross, which is simply called the bearish trend or the bear market, or simply bearish, something that doesn't always excite us. But the truth is, if you know how to juggle between these charts, it helps you take advantage of bull markets and also the bear markets. But that's a topic for another day. The next thing I want us to look at is the relative strength index, or RSI. RSI is a momentum indicator that tells whether an asset is overbought or oversold. It usually runs on a scale of 0 to 100. And if RSI is above 70, it signifies overbought, and potential could signify also a pullback. And if RSI is below 30, it pretty much signals oversold, which means it has huge potential or good potential for reversing uptrend. Usually traders use the RSI to confirm potential reversal and also trends. But remember, RSI can stay overbought or oversold for a long time, so it is always advisable to combine other indicators to help you make quick and informed decision. Now the big question is, at which point are you supposed to use one of these? My answer is simple. You have to combine all of them to maximize its impact. Just imagine this. Price is near the support zone. You spot a hammer candlesticks forming. The 50-day moving average is holding, and RSI shows oversold. Sweet. That is a perfect spot to identify a potential price uptrend. So you see, it's very important to combine all of it to make sure that you maximize its impact. So those are the top trading indicators every beginner should know: support, resistance, moving average, candlestick pattern, and of course resistance strength index, or RSI. Remember, no single indicator guarantees profit, so it is always advisable to combine all of them. If you found this video helpful, don't forget to like, share, and also let me know in the comment section what we need to talk about next. Have a nice day. My name is Emmanuel, and I will see you in the next video. Bye.